Hello, how are you all? I hope you're doing good. In fact, I'm doing great. So, with regard to CA Foundation November 2020 Principles and Practice of Accounting paper discussion, the part number 4 video got cut abruptly because of the network issue. I'm using internet to record this video. So, I thought I'll do another part 5, showing you the last part. So, come on, let's get started with part 5. So, that's question number 5C and question number 6 remaining. 5C, I was drawing up the format and I had a network issue because it's raining heavily right now on the day when I'm recording this. At least in that part of Bangalore, that street of Bangalore where I live in, it was raining. So, question number 5C, as we were seeing previously, is a question which is relating to manufacturing account, trading account, and creditors account. So, with regard to this particular question, they have given data, but it's incomplete. So, we have to complete this data. So, it doesn't have trading account though. It has raw material account, creditors account, and manufacturing account. We'd have to fill up this question. We'd have to fill in the blanks type, and there is a couple of errors, and we need to rectify them. So the first ledger would be raw material account. Materials account, and I would have to continue and then prepare two more ledgers. I'll drop the format for one ledger, copy paste the same to make it up for other ledgers. So this is my raw material account. Copy, and here I go. Now I'll get creditors account. So this is my creditors account. Creditors account, and now below this I'm going to drop our trading account. Sorry, manufacturing account. Yeah, we have certain data and we have certain corrections also with regard to the same. First, I'll put up the data what is given to us, and then once I read the items, I'll go on correcting them with regard to the adjustments. First, raw material account, opening stock 1,27,000. I'll write to opening stock. Actually, it should be written as to balance brought down. They've used the word opening stock. I'm writing the same thing, 1,27,000. Not allowed to write opening stock account in raw material account. I would have to write to balance brought down. That is how it is to be written. Yep, two creditors. They've told that there is an item called two creditors that is for purchases made. Whenever you make purchases of raw material account debit to creditors account will be the journal entry. So in raw material account, we will write two creditors, that is purchase. Purchase of raw materials. This data you would get it from raw material account, sorry, creditors account. So that is not given. Then we have by raw materials consumed. Whenever raw materials are consumed, this should actually be returned to manufacturing account. Because this much value of goods will go from our raw material account to manufacturing account. Once the goods are manufactured, from the manufacturing account, they go to trading account. You get that? And in the trading account, we realize gross profit, which after deducting indirect expenses will arrive at net profit, which will eventually increase our capital. That is the purpose of preparation of balance sheet, which will give us financial position understanding, which is used in the decision making process. So that's the process of accounting. So raw material consumed, this will go to manufacturing account. So in the manufacturing account, on the debit side, you'll have two raw materials. Yeah. Okay. So that is also not given. So I've written it like that only. So then they've given by closing stock. This is again an item which is not given, which we would have to find. Let us do it. That's it. By this, they've closed our raw material accounts. Perfect. Three items to be found. We'll find it. Then creditors account. What is the information given in creditors account? Have they given opening balance? Yes. Balance brought down is 15 lakh 70. Balance brought down given is 15 lakh 70,000. 15 lakh 70,000. What else have they given? To bank account. Payment made against the creditors to bank account. How much have they given with regard to bank account? They've given 23 lakh 50, 23 lakh 50,000. Perfect. Then you have two balance carried on 6 lakh 60,000. So I'll put that as well. That is the closing balance. They've given this. How much is it? 6 lakh 60. So the items that has not been put in this is, if you can observe, in the raw material account, I put two creditors. So here I would have to put by raw materials account. What is this for? This is for the raw materials purchased. For the raw materials purchased. Yeah, this is not given. That is the one item that we would have to find in this. Which way did I go? So yeah, that is one item which I would have to find in this ledger. Creditors account. Have they given any other information? Right now, no. I will go on posting the items in manufacturing account now. See, these items, what I posted need not be correct because there are adjustments given. Might change. It might include lot more than what is here, or the amount there might be wrong. It might be including few items which should not be included. We'd have to correct it. Let us do that. Come on, let's go to manufacturing account. What do you have in manufacturing account? Two raw materials. So some raw materials is consumed. Basically, this is consumed. If you can remember, in the raw material account, I wrote here by raw materials consumed. So that's coming in manufacturing unit as to raw materials account that is consumed. You get that? That we would have to write that they've not given us. So we would have to find. Now we would have to find out. Let us do that. Next, two wages 3 lakh 65. Congratulations, they've given. Sir, is this correct item or correct amount? Item is correct. Amount, I don't know. How will we know? You would have to read the question completely. 3 lakh 65. To depreciation. Sir, will depreciation come in manufacturing account? Yeah. Sir, all depreciation, sir? No. Depreciations on the plant and machinery which is used in the production process will come in manufacturing account. Depreciation on the assets used in the trading house, in the warehouse, will come in trading account. Depreciation on the office equipment will come in P&L account. Note this. Not all the depreciation is indirect expense. Certain depreciations are direct expenses also. Certain depreciations are manufacturing expense also. Now in the factory, you're using a machinery which is producing the goods. So that factory machinery is there, no? On that, when you compute depreciation, such depreciation will come in manufacturing account, not in P&L account. In the godown where the stock is kept, there are certain racks and there are certain assets, there are certain machines, everything. So that expense will come in trading account. And in the office where the CFO sits, CEO sits, there is AC, there is refrigerator, there is sofa set, furniture, everything. On that items, depreciation will come in P&L account. You get that? So expense incurred in the factory, manufacturing account. Expense incurred in the warehouse, trading account. And office expenditure, P&L account. Note that. So it depends. It's the same for the assets also. Oh, let me bring myself down. So depreciation. How much depreciation they've told? 2,15,000. Right now I'll put 2,15,000. Is this final? Let us see. If there is no adjustments, this is final. Direct expense 2,49,000. I have put what they've told. If there is any changes, we'll see it later. To direct expense. How much? 2,49,000. 2,49,000. Okay. By trading account 17,44,000. How much is it? 17,44,000. 17,44,000. So this is the value of the finished goods. Finished goods. Value of finished goods transferred. Yeah, we transfer the finished goods from the factory to the godown. That's is happening here. So then you transfer the value of or cost of production, or it is a cost of production. Instead of writing value, I'll write cost of production. cost of production of finished goods, or cost of producing finished goods transferred to trading account. Transferred to where? It's being transferred to trading account. You get that? So I've put up these figures. There's a lot of figures missing there. We'd have to fill them up and also do this correction. So many we have? One, two, three adjustments. We'll see one at a time. First one, purchase of machinery worth 12 lakh on 1st of April 2019 has been omitted. Machinery are charged at a depreciation rate of 15%. So in our manufacturing account, we have depreciation of 2,15,000. But that 2,15,000 depreciation is on only one part of the machinery, or only certain machineries. Certain machineries depreciation computation has been royally omitted. So what is that machinery? They've told clearly. Purchase of machinery worth 12 lakh on 1st of April 2019 has been omitted. So what do we do? That depreciation is wrong. It is less. We'd have to include this additional depreciation now. Shall we do this? Come on, let us do it. So this depreciation of 2,15,000 is incorrect. So I'll write it in the inner column. 2,15,000. You get that? That is wrong. We'll correct it. What will we do? Correct it. What do? We would have to add further depreciation. Yeah. Shall we add further depreciation? Okay. What to say? Purchase of machinery worth 1 lakh. Okay. Depreciation on machinery purchased. You get that? On the machinery purchase, they have forgotten to add depreciation. I'm adding it now. How much is it? That is going to be 12 lakh into 15%. 12 lakh into 15%. What is our year end? Is our year end 31st March? Have they told anything? I'll assume my year end to be 31st March. Yeah, financial year 1920. So 31st March. So 1st of April 2019 we purchased. Entire year depreciation we would have to give. So 12 lakh into 15%. 12 lakh into 15%. How much is 12 lakh into 15%? That comes to 1,80,000. So my total depreciation will be 2,15,000 plus 1,80,000. It is 3,95,000. But they've wrongly put only 2,15,000. Now I corrected this. Now the depreciation increased. When the depreciation increased, the expense increases. It is actually increasing our cost of producing final goods. Am I right? So this 17,44,000 is actually wrong. You get that? 17,44,000 is actually wrong. I would have to correct it. What will I do? Will that increase or decrease? Whenever there is increase in the depreciation expense, there is increase in the cost of production, increasing the value of finished goods. So I would have to add additional depreciation. How much is that? That is 1,80,000. This is to be added. You got that? So each adjustment, we would have to do double entry system. Whenever there is increase in the expense I've recorded now, and that is increase my cost of production of finished goods also. Yeah, simultaneously I'll do both. If I do only the debit side and forget the credit side, ultimately we'll mess it up. Later, if I tell you, won't even understand why is sir telling no. So whenever you do, you always see debit credit simultaneously and then start doing it. Come on, let us go ahead. Next. After that, we have adjustment number 2. Wages include the following. Okay, that wages, whatever they've written here, 3,65,000, whatever they've written here, no? Here even I have written 3,65,000. This includes certain items. What and all does it include? Have a look. Wages include factory workers 3,15,000. Okay, that should be included. Paid to labor at office 50,000. So this office employees, if you pay any wages, where will it come? It will come in P&L account, not in manufacturing account. But what have they done? They've wrongly included 50,000 in manufacturing account. So what should I do? This 3,65,000 is overcasted. So what do I do now? I would have to subtract it. So first I'll put it in the inner column. 3,65,000. Yeah. Shall we reduce it now? one column below. Everything's fine. So now what is it that I should do? I should less deduct it. What should I deduct? Wages to office, labor at office. Yeah, that should not be included. How much is that? That, my friends, is 50,000. So I'll write it as 50,000. When I deduct it, how much will be my correct wages? My correct wages will be 3,65,000 minus 50,000. That is 3,15,000. So now I had wrongly written 3,65,000 as my wages. When I wrote 3,65,000, my cost of production had wrongly gone up. Now I would have to reduce it. So what I'll do, less. What is less? Okay, office labor, wages to office labor. Wages to office labor. Why am I deducting when the wages to office labor is basically wrongly included in wages and I'm decreasing wages? When I decrease wages, my cost of production is reducing. If I wrongly rate wrong expenses, my cost of production will increase. Now it's like this. I'm manufacturing water bottles. When I'm manufacturing water bottles, I should only write those costs what is incurred in manufacturing water bottles. If I wrongly write some my personal expenses, the water bottles cost will increase. When I remove it, cost will decrease. So that's the point. How much is it? 50,000. Minus 50,000. I told no less pole. Okay, perfect. Let us go to the next one. So we're done with the second one. Third one. Direct expenses includes the following expenses. Okay, they've told few expenses. These are all including direct expense. Let us check if these are all correct. If it is correct, we'll leave it. If it is not, we'd have to remove. Like this one. See here, factory workers, it's correct. 3,15,000. It is to be included. 50,000 is wrongly included, so we eliminated it. Come on, let us see direct expense. First one, electric charges. Yes. Now tell me, electric charges, is it an expense in manufacturing, trading, or P&L? That was a short break for me to take a sip of water, asking you a question. I hope you thought of the answer. The answer is pretty simple. When the electricity used in the factory, it is manufacturing expense. When the electricity is used in the warehouse, it is trading expense. When the electricity is used in the office, it is P&L expense. You get that? Same electricity depends upon where it is used. We choose where to write. So the electricity bill of the factory will go to manufacturing. If it's of the warehouse, it will go to trading. If it is of the office, it will go to P&L. Now we'd have to see this. What is it? 80,000 of, okay, rupees 80,000 is the electricity bill, of which 25% pertain to office. So 80,000 by 25% is not relating to trading account. Sorry, is not relating to manufacturing account. So what should we do? Should eliminate it. So what do I do here? So this direct expense, I'll write it in inner column. How much? 2,49,000. What do I eliminate from this? I would have to write less office electricity expense. How much is office electricity expense that I should eliminate? 80,000 into 25%. 80,000 into 25%. Or I can put it in the next column. Eighty thousand to 25%. How much is 80,000 to 25%? Yes, that comes to 20,000 rupees. 20,000 is, okay, 20,000. It's not taking the comma. Fine, we'll add it at the end. 20,000 rupees is less. When you reduce 20,000, which is not expenditure at the factory, the expenditure for the production is reducing, which is reducing the cost of our production. Basically, here I would have to subtract. Debit decrease, credit decrease. You get that? Decrease. What is it? So this is actually a question which is on final accounts come rectification of errors. Let us go to next one. Fuel charges 25,000. Fuel can be incurred at factory, can be incurred at warehouse, can be incurred at office. So they have not told anything. I'll assume this fuel to be incurred in the manufacturing process. Freight, freight inwards. Freight inwards is the expenditure incurred to bring the goods into the factory. Freight outwards is the expenditure incurred to take the goods out of the factory. Freight outwards is not manufacturing expense. Freight inwards is manufacturing expense. Freight inwards is like when you buy raw material, it's incurred to bring the raw material to the factory. So freight inwards is manufacturing expense. Is it being included? Yes. Should we do something about it? No. What if it was freight outwards? Then it is not manufacturing expense because it is incurred to take the goods out of the factory. Then I would deduct the same. Perfect. Next, delivery charges to customers. Once the goods are manufactured, it is sold. In the process of selling, you are doing delivery. And when you're delivering it, you are charging money, you are incurring money. That money is not direct expense. Such expenditure is not incurred at the factory. It should not be part of our cost of production. It should not come in our manufacturing account. What have they done? They've wrongly included direct expenses. They've given direct expense includes the following. So this 22,000 is wrongly included. What do I do? Eliminate it. Come on, let's eliminate it. Less. What is that expense? That is delivery charges to customer. Delivery charges to customer. How much? 22,000. 22,000. Perfect. So I would do this subtraction. How much do I get? 2,49,000 minus 20,000 minus 22,000. 2,07,000 is the correct one. Further, we forgot to do this. Whenever delivery charges to customers is reduced from the direct expenses, the cost of production is reducing. When the cost of production reduces, what is happening? We would have to reduce it here. Yeah. So ultimately, the corrected figure would be how much? I've got this now. I've got the trading account figure. So what is the balance transfer to trading account? 18,32,000. So what all do you have in manufacturing account? We have raw material consumed, which is not yet found. We have not found that yet. That has to be found. So that's one thing that's missing. Come on, let us go to the previous one. What all do we have here? Creditors account. 23,50,000. Okay, I think are we done with the question here? Yeah, we're done with the question. Let's try to close them. Balance, okay, 15,70,000 is what you were supposed to pay previously. 23 lakh 50 you paid, still 6 lakh 60 you would have to pay. Why? Because there is purchases. Let us see the total. If I put sum on both sides, there is a difference. The difference is the balancing figure. This balancing figure. What is this balancing figure? Okay, I'll leave it here. This is balancing figure. How much is the balancing figure here? 30 lakh 10,000 minus 15 lakh 70,000. 14 lakh 40,000 is the purchases made during the year. 15 lakh 70,000 was already there. You owed, you purchased 14 lakh 40. So total came to 30 lakh 10,000. Out of that 30 lakh 10,000, 23 lakh 50 you paid. So 6 lakh 60 you would have to still pay. So this 14 lakh 50, once you find it here, creditors account may it is buy raw material. The debit aspect will come in our raw material accounts as two creditors, which I would have to write here. I'll put equals and select this amount. So because of creditors account may credit of raw materials, in the raw materials account debit side you will get how much? 14 lakh 40,000. Where do you get this from? Balance derived from creators account. I didn't find it here. I first found it in creators account and from there I posted it here. You get that? So this is what we have found. This is not what they gave. This is not what they give. We found this. Okay. In our raw material account, we have opening stock of raw material. We have purchases made. Raw material consumed is not found and closing stock is to be found. Two items are missing. Two balancing figures cannot be found. So what do we do? Whenever we write by raw material consumed in raw material account, where is it consumed? In the production process. I repeat, whenever we say raw material consumed, where is the raw material consumed? In the production process. Such production is happening in the factory where we prepare manufacturing account. So in the manufacturing account, I have everything and this is what we find as balancing figure. I'll find this balancing figure, put it to raw material account and then find closing balance of raw material. Yeah, let me show this. So this, my friends, is balancing figure. Yeah, first I'll put totals. Lakh 17,000 here, 18 lakh 32,000 there. Let me find the balancing figure is equal to 18 lakh 32,000 minus summation of the remaining items. 9,15,000 is the balancing figure. What is this? This is the value of the raw material consumed in production. So much of raw material will reduce. Here I'll write 9,15,000. Found this. So I'll write below this without you getting confused so that you won't get confused. What do I write? From where? Manufacturing account. Very good. Yes. Now ultimately I'll find my closing stock as balancing figure. 9,15,000. So there is shortage. That shortage is 15,67,000 minus 9,15,000. That gives me 6,52,000, which is my closing stock. That's it. By this, I'm done with my raw material account. I'm done with my creditors account. So am I done with my manufacturing account. That is what been asked in this question, and we're done with question number 5C. Finally, we're venturing into our question number 6A. Question number 6A. Question number 6A. Question number 6A. Yeah, it's a question on company accounts. Basically, they've asked us to prepare journal entries or what? Obviously, journal entries. Yeah, pass the necessary journal entries to record the above transactions in the books of ABC Limited. Come on, let us do accounting in the books of ABC Limited. Question 6A. In the books of ABC Limited. Debit amount, credit amount. I think this would much would do. Yeah. Journal entries. Record. Show of shares. Yep. Okay. What do we need? We need a date column, particulars column, ledger folio, debit amount, credit amount. I can either draw it or I can copy it from here. What would I do? Keep guessing, keep guessing. I would copy it from here. I would copy it from there, paste it here. Date column has become too big. What will I do? Make it small. Particulars has become too small. Make it big. Ledger folio is too big, sir. Reduce it further. Make it really small. Yeah, then we have debit amount, credit amount. Sir, what is this? I'll correct it. I'll delete this and then put the correct entries. Then Roko Zara Sabar Karo. 6A. Yep. ABC Limited issued 20,000 equity shares of rupees 10 each, payable as. Okay. The first one, 2 rupees per share on application, 3 rupees per share on allotment, 4 rupees per share on first call, 1 rupee per share on final call. Okay, guys, let's do this. So, how many shares? 20,000 equity shares. Nominal value 10. Do that. 2 plus 3, 5, 5 plus 4, 9, 9 plus 1, 10. So, no premium, no discount. Discount is not possible, but okay, no discount, no premium. Perfect. All the shares were subscribed. Okay, money due on all the shares are fully received except for Mr. Bird holding 300 shares. So there is no oversubscription, no undersubscription. So perfectly received. Where is the problem? There is a person by name Mr. Bird. No, not Akshay Kumar. One more person by name Mr. Bird. What did he do? He was holding 300 shares. Okay, who failed to pay the first and final call money. So first and final call, 4 rupees and 1 rupees, whatever is there, we didn't receive the first call and final call money for 300 shares. So for the remaining shares, we've received all. For 20,000 shares, we've received application and allotment. So application I have received completely. Yes. Allotment I have received completely. Yes. On first call and final call, what happened? We didn't receive for 300 shares. Okay, I'll straight away start the entries. If you want, I can actually show a small table for you to understand. Yeah. No. Application, allotment, first call, final call. Yeah. Shareholders. Okay, before that, application, how much per share? 2 per share. Allotment 3. First call 4, final call 1. Shares in total it is 20,000. Okay, in total it is 20,000. But yeah, two parts of shareholders. One is other shareholders. Other one is Mr. Bird. Mr. Bird flied away. Okay. Other shareholders. They what was due, what was received. I'll write both. Okay. Application. I'll write here 2 share allotment, 3 per share, 4 per share, 1 per share. I can straight away do journal entries, but this with the hope that it will make you understand better. You received. How much was due, how much is received? With respect to other shareholders, how many shares do they hold firstly? Fine. Other shareholders, Mr. Bird holds 300 shares. Am I right? Yeah, 300 shares. So others sold how many shares? 19,700 shares. Yeah. So this table gives us a wholesome understanding of the data. So on application, how much is receivable by you? You are supposed to receive 19,700 shares into 2. I forgot to put equals in the beginning. 19,700 shares ke liye you are supposed to receive 2 rupees per share. 39,400. Did you receive the same? And here you are supposed to receive is equal to 300 multiplied by 2 rupees per share, 600. And how much were you supposed to receive? How much did you receive? You received the same amounts. I'll put one total column here. Yeah, totally for 20,000 shares, you are supposed to receive 2 rupees per share. 40,000 rupees was received. Yeah, no problem there. Then allotment may what happened? Allotment may same 19,000 shares. You are supposed to receive into 3. 19,700 shares. And for each share, you are supposed to receive 3. Okay, how much did you receive? You received entire money. No problem. And here you are supposed to receive 300 shares multiplied by 3 per share. Did you receive so much? Yes, you received so much. No problem. How much was receivable? Receivable was 60,000. Received is 60,000. No problem. At at first call stage, what happened? How much was receivable? What was receivable from 19,700 shareholders is 19,700 multiplied by 4 rupees per share. Did you receive so much? Yes, you did receive. But what happened to Mr. Bird? Mr. Bird was supposed to pay us for 300 shares that he hold into 4, that is 1,200. Did we receive? No, we didn't receive. What we received is 0 from him. You get that? Yes. So now tell me how much is receivable. 78,800 plus 1,200. That is 80,000 was receivable. How much was received? 78,800 was received. So there is calls in arrears here. Calls in arrears. How much is calls in arrears? Calls in arrears is 1,200. How did I arrive at calls in arrears 1,200? 300 shares of Mr. Bird. He didn't pay 4 rupees per share. 300 into 4, 1,200. Or in other terms, 80,000 was receivable. 78,800 was received. 80,000 minus 78,800. 1,200 is calls in arrears. This 1,200 is calls in arrears. You get that? Similar thing would have to do for which one? Second call. Sir, you are copying. Yeah. Copying. 19,700 into 1 was supposed to be received. And here 300 shares into 1 rupee was supposed to be received. But what was received? Only 19,700 was received. 20,000 was not received. Meaning how much is the amount not received? 300. So what is the total calls in arrears? 1,200 plus 300. 1,500 rupees is calls in arrears. So this is the kind of table that you usually see in scanners and other places. If you that is how you have learned it. Don't want to disappoint you. So I put it up there. If you want to know the journal entries, first you would have to write the due entry, then you'll write the receipt entry. Yeah. Okay, come on. Let us do this. So first you'll write the receipt entry for share application, bank account, to they told equity shares. They have not told equity shares, so I'll just write shares. Okay, share application account. Yeah, what would be the amount here? Amount here would be the amount received. How much is received? 40,000 is received. You get that? Yeah. How much is towards share application? Entire 40,000. Then would that money remain at share application account? No. Here you can write the narration. Being share application money received. What do you do with this share application? This share application money has to be transferred to this share application money has to be transferred to which account? It has to be transferred to share capital account. Share capital account. Yeah. How much will be transferred? Same 40,000. Same 40,000 has to be transferred. So the journal entry for transfer of share application to share capital is share application account debit to share capital. What is the narration? Being share application money transfer to share capital account. Done. After this, you would have to make share allotment. Share allotment means first you will make share allotment, then you will receive money. So the journal entry is share allotment account debit to share capital account. Yeah, tell me what exactly is the amount on share allotment? On share allotment, you are supposed to receive 60,000. Due is 60,000. Did you receive 60,000? Yes, you did receive 60,000. Or in other terms, instead of going reference to the table, you can straight away do 20,000 shares into 3 rupees per share allotment. 20,000 into 3, 60,000. That is again easier to arrive at. What is this? Being share allotment money due. Recording a due entry. Next, there will be receipt entry. Here, Mr. Bird is also good. He paid the allotment money. He didn't pay which money? Share call money and share first and final call. Share allotment account. I'll write bank account debit to share allotment account. You get that? So what exactly is the amount involved here? 60,000. Sir, is it fully received? Yeah. Is there any call scenario received? No, no, no. So what is this? This is in share allotment money received. Done. Now comes the call stage. Call stage may also first you would have to make the share call, then you would receive the money. What is it that you should do first? Should first make the call. So I'll write share call account debit. Or I'll write share first call. Is that what they mentioned in the question? Share first call. Share first call account debit. How much is it? For 20,000 shares, it is 4 rupees per share. So that is, okay, I can give a reference here. 20,000 shares into 4 shares. Sorry, 4 rupees per share. 80,000 rupees. Yeah, but entire money is due. Entire money is receivable. No doubt there. But did we receive it? The answer is no, we didn't receive. Did we receive it? The answer is no, we didn't receive. How do we do? Let's show. Then, what is the next entry? Wait a second. I'll just add up some extra space that we need. Your space we occupied so far. Some similar such space we need it further now. Yeah. Now we're going to write the entry. Receipt. Bank account. Debit. How much did we receive? We received it for 19,700 shares. For 300 shares, we didn't receive. For 19,700, how much did we receive? 19,700 shares into 4 rupees per share. That comes to be how much? 78,800. But how much was receivable on first call? Here first call account, how much was receivable? The amount that was receivable is 80,000. What was received is 78,800. Difference is how much? 1,200. What is this? Calls in arrears. Sir, what is calls in arrears? Calls in arrears refers to such money which is called but not received. Who's this person who didn't pay? Mr. Bird. I'll write here. 300 shares multiplied by 4 per share he didn't pay. 300 into 4, that gives me 1200. This is tricky, remember this. 78,800, how did I get? 19,700 multiplied by 4 per share, and this for 20,000 shares. Yeah, I hope that's not an issue. Okay, being share call money and calls in arrears, recorded. I hope that helps. Come on, let's go to the second call now. Same way we have to do second call. Same way how we recorded our share first call, we have to do accounting for share second call. Let us do it. So firstly, it is called a share final call. Okay, in this call, it is not share allotment. Yeah, in this case, how much are you supposed to receive? 20,000 shares into 1 rupee per share, 20 rupees, 20,000 rupees. However, I've done it in the working note here. I'll show it to you. See, 20,000 is receivable. Yeah, not an issue. No. How much is received here? You receive with regard to 19,700 shares again. Receive with regard to 19,700 shares into rupees 1 per share. How many will not pay? 300 shares. Mr. Bird. Mr. Bird, who owns 300 shares, is not paying how much? 1 rupee per share. So that comes to how much? That comes to 300. 300 rupees you will not receive. 20,000 rupees you are supposed to receive. How much do you receive? You receive 19,700. Have a look. I've done it in the working note here as well. 19,700 is received. 300 is not received. So call scenarios becomes how much? 300 in this case. 20,000 is the total amount. Perfect. So with respect to Mr. Bird, who owns 3 shares, 300 shares. With respect to Mr. Bird, who owns 300 shares, he has paid the application money, he has paid the allotment money. How much did he not pay? He didn't pay the first and final call money. Okay, come on. Let us write here. This is one table. I don't usually call this working note. And in the usual class where I teach also, I don't put this table as a part of the answer. I teach them working note along with the answer solve itself. However, if you guys have learned it this way, you guys can copy this. Yeah, I've made it good enough to understand this table. So I hope it helps. Now let us go to our 4 feature calculation. So before that, I would have to write Mr. Bird. This I'll call it, 4 feature. Share forfeiture and reissue. How to account the same? Come on, let us see share forfeiture and reissue. Mr. Bird. Mr. Bird. Number of shares he holds is 300. Yeah. Amount paid. What did he pay? Application. Allotment. Per share. How much did he pay per allotment and application? 2 rupees and 3 rupees, isn't it? Yeah. 2 and 3. Amount not paid. per share. How much is the amount not paid per share? First call. Second call, or I can write final call. Final call. That is 4 rupees and 1 rupee. You get that? So what is paid is 5. What is unpaid is also 5. So with regard to these 300 shares, we have received 5 rupees. And what we have not received? 500 rupees. So calls in arrears is 5 rupees. Amount received is 5 rupees. On reissue, yeah, maximum discount is 5 per share. 5 rupees is already received, isn't it? 5 rupees already received. So maximum discount that you can give is 5 rupees. Let us see how much is the discount that they are giving. The forfeited shares of Mr. Bird were subsequently reissued as fully paid up at a discount of 2 rupees per share. So against this share, 5 rupees is already received. 5 rupees is not received. Now you are reissuing. At what rupees? At what price? Discount of 2 rupees. Okay, let me write this. Reissue. Discount of rupees 2. Yeah. Nominal value 10. So what is reissue price? Reissue price in that case is 8 rupees. How did I get this? 10 minus 2. 10 minus 2. So what will happen on reissue? On reissue, see, this is received. This is not received. Amount not paid. Make this red. Make this red. 5 rupees is already received. And now you'll receive 8 rupees per share. I'll put this 8 here. Okay. 10 minus 2. 10 minus 2 means it took 10th of February. Wow. Why Excel? Wow. 10 minus 2, 8 rupees. So firstly you have received, yeah, 5 rupees against this share, and now you're receiving 8 rupees. So you received how much? Totally 13 rupees. So there is extra money that you collected, 3 rupees. That 3 rupees will go to capital reserve. That is the money remaining in share forfeiture account. So this 2 rupees discount will first be subtracted from this 5, and balance 3 rupees remaining in share forfeiture will get transferred to where? Capital reserve. So that is the point. I just explained it to you with the help of a working note before I do journal entries. Come on now. Let us do the journal entries for forfeiture. So first I'll write the journal entry for forfeiture. The journal entry for forfeiture is share capital account. Why? Capital is reducing. We are forfeiting that share. Share capital account debit. Yeah. How many shares? 300 shares of rupees 10 each. Fully called up shares, isn't it? So it will become 3000. Next thing, with regard to these shares, how much of money which was previously collected would go to share forfeiture account. It is like profit. Now the shares have been forfeited. Will you refund the money? No, 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 no. You will not refund it. So amount. Okay, first this is amount called up. Okay, with respect to share forfeiture account, you will write amount paid up, and call scenarios is amount unpaid. Or we can also call it what? Call scenarios. I'll write it in the ledger, don't worry. So I'll write in the journal entry. So here, share forfeiture account. How much is the amount that is being received? 300 shares multiplied by how much per share is received in share forfeiture account? Per share you have received 5 rupees. 5 per share. And the same I'll write here also. How much is it? So 1500 rupees is received. 1500 rupees will go to where? Yeah, call scenarios. 1500 will go to call scenarios. Yeah, being shares forfeited. You can write it little longer. You can write being shares forfeited for failure to pay first and final call money. You can write that if you want, but I am keeping it simple. Next, once these shares are forfeited, what are we doing? We're reissuing these shares. So bank account debit. Yeah, how many shares are issued? 300 shares. At what price? 300 shares at rupees 8 per share. I told you reissue at 2 rupees discount, 10 rupees share at 2 rupees discount becomes 8 rupees. So how much is that? That, my friends, is 300 into 8. That is 2400. Next, there is discount against this share. That discount I'll not write share discount account. I will be adjusting it against share forfeiture account. Yeah, a quick revision of entire company accounts chapter. I've done it previously and the video is available on YouTube. The link is in the description. You guys can go back and watch it if you want. Yeah, share forfeiture account. How much money? Discount part. Okay, this is with regard to discount part. Here it is amount received or reissue price. Okay, how much is the discount here? 300 shares into rupees 2 per share. That is a discount part. So that is 300 into 2, which comes to 600. So total, he will go to which account? Share capital account. That will be how much? 300 shares of rupees, 10 each. 10 per share. How much is that? That is 3000. You get that? So being 300 shares reissue. Being forfeited shares reissue. Perfect. Okay. There is share forfeiture account 1500 here. There is share forfeiture account 600 here. So the difference should be transferred to capitalism. That is profit. You get that. How much is that? Observe carefully. Share forfeiture account credit 1500. Share forfeiture account debit 600. The balance is 900. If you observe cautiously, I told you here. Yeah, difference here should be transferred. How much is it? I told you 5 plus 8, 13 rupees. 5 rupees received previously, 8 rupees received now. So totally how much will it come to? 13. Share value 10, you have received 13. 3 rupees extra. 3 rupees per share you collected extra. Into how many shares? 300 shares. 300 into 3, 900. How much do we get here? 1500 minus 600, technically 900. So 900 is profit. How simple. I am repeating this to you. This is a simple logic. Try and catch this. Against this 300 shares of Mr. Bird, Mr. Bird paid 5 rupees. Another 5 rupees he didn't pay. On reissue, you received 8 rupees. So 5 rupees Mr. Bird paid, 8 rupees some other person paid. Totally you received how much? 5 plus 8, 13. Nominal value 10. So 5 plus 8, 13 is received. For 10 rupees share, 3 rupees extra what you've collected is what? Profit. Yeah, that will go to capitalism. Capital profit it is. So it will go to capitalism. Just paste the format. Yes, come on, let's write the entry. The entry will be share forfeiture account debit to capitalism. How much money? This would be, I will write it as 300 shares multiplied by how much? 5 plus 8 minus 10. One way. In another way, you can write it as 1500 minus 600. Whichever logic will help you, or whichever logic you can make sense of, write that. So 900 is the answer. What is this? being balance in share forfeiture transfer to capital reserve. Yeah, you guys can also write it this way. Usually you might have learned it like any balance in capital reserve, any balance in share forfeiture should be transferred to capital reserve. The logic is this part. Yes, did this help? I hope you guys understood. By this, I'm done with the company accounts issue of shares question. So the entire answer is here. I would put this Excel file in the drive and then share the link to you people, which you can take to download this file. So we're done with 6A. Let us do 6B, 6A and quickly finish this discussion. Yeah. So I think we have only issue of debentures question followed by one theory question. Come on, let's do this. Issue of debentures question. I'll copy paste the entire format. You need the same format. Yes, copy pasted 6B. So this is in the books of Y Company Limited. ABC over, Y over. Sir, why is it called Y? I don't know. Journal entry record issue of debentures. Our format is ready. I am ready. Let's start with 6B. Shall we? Yeah. So read the question. What does it go like? Y Company Limited issues 10,000 12% debentures of the nominal value 60 lakh as follows. Let us do it. To a vendor for purchase of fixed assets worth rupees 13 lakh, nominal value 15 lakh. Okay, to a vendor you purchased fixed assets worth rupees 13 lakh, 15 lakh worth debentures you give. So 13 lakh purchases you made, 15 lakh you give. So you're issuing discount, you're issuing debentures at discount. The seller is not giving you discount. You purchased 13 lakh worth furniture or fixed assets. You should give him how much debentures? 13 lakh. What did you do? Instead of giving him 13 lakhs, you give him 15 lakhs worth debentures. So when you give 15 lakh worth debentures, you're giving 2 lakh worth debentures without receiving any assets or cash. That is discount. How do we account this? First, we should write the journal entry for purchase. What is entry for purchase? Fixed assets account. Debit to what have we purchased? To you're supposed to pay the vendor. Vendor account. It's a credit purchase entry. What is the amount? 13 lakh. 13 lakh. What is this? Being fixed assets purchased on credit from vendor. What did you do against these fixed assets? Supposed to pay vendor. You're paying. If you pay by cash, you'll write vendor account debit to cash. But you're paying the vendor account debit is correct. Here 13 lakh is written. That is also perfect. But what did you do? Instead of giving 2 cash, you wrote 2. How much percentage debentures? 12% debentures. 12%. Give them 12% debentures. How much? You give them 15 lakh worth debentures. When you give 15 lakh worth debentures instead of 13 lakh, there is difference of 2 lakh here. What is this? This is discount. Discount on issue of debentures account debit. Perfect. So done with the second entry also. So we're done with this first part. Number 1 is done. Yeah. Let me now go to number 2. to sundry persons for cash at 90% of nominal value. 30 lakh. So you're giving at what? 90% of nominal value. So 30 lakh worth debentures, you're giving at, what is it? 27 lakh. What about that balance 3 lakh? It is discount on issue of these debentures. Perfect. So let me write. First, you will receive the money. I'll write it as bank account debit. So what is it? I can write debenture application, but we are receiving the entire money in one shot. So I write debenture application and allotment account. How much did you receive? You received how much? 30 lakhs into 90% is 30 lakhs multiplied by 90%. How much would that come to? That is equal to 30 multiplied by 90%. 27 lakh. 27 lakh is received. Yeah. Oh, I forgot the journal entry narration here. Being vendors settled by issue of debentures. What here? Being debenture allotment money received. What do we do? Now this debenture application allotment money gets transferred to debenture account. This will be debited. How much? 27 lakh rupees. And this will get transferred to which account? It will get transferred to debentures account. What is debentures? How many percent debentures? To 12% debentures account. Always remember that debentures account, equity share capital account, preference share capital account, when you debit or credit them, you would have to do it at nominal value. What is the nominal value of these? 30 lakhs. Sir, how do we know? They've given in the question. Sir, are you sure? Very sure. See here, 30 lakhs given to us. Sir, what is the difference of 3 lakhs? That is discount on issue of shares. You can write it as discount on issue of shares and then transfer it to loss on issue of shares. Or in fact, if you want, you can straight away write it as loss on issue of shares. No, sorry, loss on issue of debentures. Sorry. How much? 3 lakh. 3 lakh. What is the narration here? Being debenture application allotment money transferred to debenture account. Yep, that's it. Let us go to the next one and the last one. Banker as collateral security. So why do you give these shares, debentures as collateral security? You basically borrowed loan. So when you borrow loan, what is the entry? Bank account debit to bank loan account. So you've taken loan from the bank. Bank account debit because the asset is increasing. Bank loan account credit because loan is a liability increasing. How much loan did you take? Collateral security for a loan of 14 lakh. 14 lakh is the loan. Okay, guys, perfect. What is this? Being loan taken from the bank. Against this, when you issue debentures as collateral security, debentures are increasing. So you would have to write to 12% debentures. How much? You are giving 15 lakh worth debentures as collateral security. Sir, what would be the debit aspect here? Can I write bank account? No. This is actually not true issue of debentures. This is issue of debentures as collateral security, meaning these debenture papers, what is given to bank is just meaning it's not counted. If you fail to pay the loan, those papers will become debentures. Yeah. So, and if because these are not actually true debentures and you're giving them as just like that, you would tell the bank, keep it as suspense. Don't tell anyone. Let it be between only both of us. So they keep it secret. So it's a suspense arising because of debentures. So we call it debenture suspense. Yeah, you want me to repeat? I know I'll repeat. I can hear your mind. 15 lakh worth debentures here, no? You have not received cash, but you still given them. If you tell this to shareholders, they'll kill you. So what will you do? You'll keep it a secret. You'll call it debenture suspense. Done. If you repay the loan, this bank loan account will reduce. So bank loan will be debited. You pay money, bank will be created. And these debentures also, suspense papers also will be torn. So it will become debenture to debenture suspense. So if the loan is repaid, this entry will be reversed, bank loan to bank, and this entry will be reversed, debenture, 12% debentures to debenture suspense. If you fail to repay, you know what will happen? This bank loan will get nullified and it will become debenture. So you'll write bank loan account debit to debenture suspense. So technically making it like you issued debentures to them. Got it? Yes. So this is being debentures issued as collateral security. This is the entry. Not a very favorite entry for many people, but the point here is whether it's not whether you like it or not. It's about requirement in the exam. It is required in the exam, you would have to do it, guys. Yeah, that's it. I'm done with 6B. This is the entries asked in 6B, that is issue of debentures. Yeah, I can now take you to the next one, 6C. 6C, the last question. Discuss the factors taken into consideration for calculation of depreciation. So whenever we go for computation of depreciation, what are the factors that is considered? Question number 6C. Factors considered in computation depreciation. Yeah, pretty simple. Depreciation computation formula is there, no? The items in that is factors considered. Not all the items, that is certain items which are considered. Number one, in the depreciation, no, cost is very important. If the cost is more, the depreciation is more. The cost is less, the depreciation is less, because depreciation as a percentage is always multiplied against the cost. So the first and foremost term that is important is cost. Cost of the asset. Instead of writing the cost of the asset, you can write instead of writing cost, you can write purchase price. Purchase price of the asset. How do you find the cost? After purchase price, you add expense incurred for installation, because all the expense incurred till the time the asset is ready to be used will be formed part of the cost. So expense for installation, all those expenses will come into picture. So instead of writing purchase price and expense incurred for installation, I can write together here cost. One word will cover up these two words. Or if you want your answer to become lengthy, you can write purchase price separately, expense incurred for installation separately. Number two or number three. After one and two, cost is there. Then if the useful life of the asset is long, the depreciation will be less for every year. If the useful life of the asset is less, then the depreciation will be more for every year. So depreciation is truly dependent on how many years will the asset be useful. So third and important term is useful life of the asset. You get that? Then you depreciate only that part of the cost of the asset which is called depreciable amount. Like you buy an asset for 1 lakh, and at the end when you sell it for 20,000, you get 20,000 back. So only 80,000 has to be depreciated. That is depreciable amount. How do we arrive at depreciable amount? Depreciable amount is total depreciation. How do you arrive at it? Cost minus scrap value. Higher the scrap value, lesser the depreciation. Lesser the scrap value, higher the depreciation. So scrap value is again a very beautiful determinant or a characteristic or an item which will be considered in the computation of depreciation. So that is scrap value. You get that? So these are the four important terms that is considered in the computation of depreciation. What are they? Number one, purchase price. Number two, expense incurred for installation. Number three, useful life of the asset. And number four, scrap value. If I have to make my answer a little more lengthy, I can include few items such as interest component, the rate of interest prevailing in the market rate of return, use and what to say, wear and tear of the asset, all those things. But few of those things, what I told now in the later stage, are qualitative aspects, so they're ignored, and few of them are out of syllabus. For example, the interest component, which comes in annuity method, is out of your syllabus. I can also tell insurance premium on the asset, that is again out of syllabus because insurance premium method and sinking fund method is again kicked out of our CA foundation syllabus. So writing these 4 points is precise and sufficient to get you those 5 marks that is there, but you would have to write a little description as to how are these four items are the factors considered in computation of depreciation. So this, my friends, is the discussion of answers with regard to principles and practice of accounting paper, November 2020. Yeah, I hope it's useful to you and I hope it's helpful. And with this fact, I don't know who are you watching this particular video. You might be the one who's writing this examination in the month of January or May 2021 or any upcoming examination. Wishing you a great luck from my side, for all the best, for doing really well in your upcoming examinations. So I really want you people, definitely if you're watching this, you're in CA Foundation. So I really hope that you venture into CA Inter very soon and then into CA Final and then as a qualified chartered accountant. So that would be my heartfelt wishes. So the link to this Excel sheet will be in the description. Please do check the link in the description. And the description also has the link to various other videos on CA Foundation that I've posted. You can watch it. And that's it for now. See you all in another lecture on a different topic. If you want any specific lecture on any specific topic, or solution to any specific question, please drop it in the comments. I would definitely consider doing it the same. So then that's it. See you all in the other phase of life. Till then, tata, bye bye. Take care. Stay in the game. What are you waiting for? There's no more things. There's no more names scrolling up. This is not a movie, guys. Yeah. Tata, bye bye. Get lost.